people study this for a long period of time and don't take action. It's trying to help them get the confidence to go ahead and take action because they believe in real estate. They believe it's a thing they want to be involved in, but it's a lot to digest on your own right out of the gate.
Yeah. Hello, everyone, and thanks for tuning in to the latest edition of FranCoach's Franchising 101 podcast. I am Tim Parmeter, founder and CEO of FranCoach and your podcast host. Today, we have a guest joining us, a return guest once again. This one is gone through their journey. They're a franchise owner. They're going to talk about how that's gone, but also a new venture, and really just kind of overall entrepreneurship, investing, how to kind of work through some of the risks or perceived risks that can come up or pop into people's heads as they are contemplating such things. So that's coming up here in a moment. First, quick recap and reminder of who we are. FranCoach is the premier franchise consulting firm. Our goal has nothing to do with selling anything. Our number one goal is to properly educate you on franchise ownership to determine if you should own a franchise. If so, what is your absolute best franchise to own? That's what our team is here to help you with. And we hope these podcasts help give you a little bit of a head start on that learning journey before you reach out to our team. So let's talk to our guest.
What if your 9-to-5 job didn't last forever? What if there was a better way to create professional success your way without fear of layoffs or downsizing? What if I told you that it's all possible through franchise ownership? Franchise ownership gives you a proven playbook to execute, so you can be in business for yourself, but not by yourself. But with thousands of franchises out there, how do you know which is the best one for you? That's where FranCoach comes in. FranCoach will help build out your ideal business model based on your talents, skills, and core values. Then use our proprietary knowledge of the franchises to bring curated options based on what you want, and then guide you through the vetting process until we find your best match. Individualized, personalized, and 100% free to you. Ready to control your future? Scan the QR code or visit francoach.net and let FranCoach help create your better tomorrow.
Hey, we're back on the Franchising 101 podcast, and not just a guest, but a repeat guest coming back to talk and give us a little update on his journey, some new things that are coming. Our good friend, Mr. Chad Ackerman. Chad, thanks for joining us.
Hey, Tim, great to be back. Yeah, when I get down, I need to reach out and talk to Tim again. It's a great way for me to pick myself back up. So I appreciate you having me back on the podcast once again.
No, it's usually the other way around. Things are going well. People talk to me and then it's like, oh man, geez. So
I get to be the anomaly then, is what you're saying.
Yeah, good deal. Well, thanks for joining us. And for those people who maybe have not, for reasons that defy logic, but have not listened or watched every single podcast episode, number one, shame on you. And number two, they're all right there. Catch up. But Chad, give us a little, I want to hear your kind of story, kind of share with us on some background and even kind of how we got initially connected a couple years back.
Yeah, no. So I was a career W-2 guy in HR of all places. So the most non-influential department you could be in a corporation, maybe. But I reached a point in my career, somebody had kind of dropped the idea in my head to get into multiple income streams, that I started looking around for other options for me to do and started looking at real estate investing. Found the idea of investing passively in real estate through Bigger Pockets and getting connected to some local people here in beautiful Columbus, Ohio, and it fed the beast and flipped the switch that I got into it, got started with a company with a group of friends called Left Field Investors. We were teaching people how to invest passively in real estate, and we grew that to a point where we ended up selling it a little over a year ago now. And when I sold that, wasn't great enough sale for me to just go fish and be golf and that kind of thing the rest of my life, but it was nice, and it gave me opportunity to look around at some other flexibility that I happened to stumble on your lovely podcast. And I did binge like your first 30 episodes driving back from Chicago to Columbus to get me started on this pace. So thank you for that.
You're welcome.
Right.
And you didn't swerve into the ditch. So that's also a bonus.
Yes. Although you do talk a lot slower here than the 2x speed I was listening to you at to begin with. But that really kind of intrigued me. I wanted to get into, another entrepreneurial situation, and you were great at helping me kind of sift through and find out what I should get into next. And I ended up buying a Focal Point business coaching franchise and got certified, had a great time. As I was trying to sift through what to do with my franchise now and who to target, I was talking to my old business partners, and a lot of them said, why don't you coach LP, limited partners that want to learn about investing passively in the space? You've got all this Focal Point talent. You got all the history with real estate. Why don't you blend the two? And I'm like, that's a fantastic idea. That I had done the Focal Point thing for a while and was mulling around trying to figure out what I was going to do. And it was about May timeframe that it finally clicked of, hey, yeah, lean into real estate with the Focal Point background and blend the two and see what you can do with it. And so I formed Chad Ackerman Real Estate with nicely acronyms into CARE to start my business CARE to help educate people on how to invest in passive real estate.
Awesome. So we've kind of gone on this full circle where you've been, and I always remember, there's certain backgrounds of people that will come into us that are, whether they realize it or not, are really kind of geared towards being an entrepreneur. And then there are a couple not so much, and HR is usually in the not so much bucket. True, right?
True. It's not the standard. It's not the breeding ground for this. That's for sure.
But that was where you'd always kind of had, again, that entrepreneurial spirit with it. And so we've got Focal Point going and now, and kind of now, but then also blended with the past of the real estate and the passive real estate investment. So maybe there's somebody, maybe I'm the only person, but I'm going to ask probably a basic question. What the hell does that mean? Like, walk us through kind of that at a high level.
That's fair. And that half of what CARE is trying to do is educate people on exactly that question. And I'll give credit to Focal Point and that franchisors. The beauty of their structure is they'll educate you on it. They let you kind of take free reign of, like, what do you want to do this? What kind of business do you want to create? So I couldn't have created CARE without Focal Point by any means. But what we get into, the passive real estate, I chased a lot of shiny objects in real estate investing and looked at all the single family things you could do. And it just burned me out to think of, how can I scale to the degree I need to do to feel comfortable leaving a W-2, that I just couldn't get to it. And I got introduced to the passive side through a local meetup. And it was unclear to me. I thought you had to be filthy rich to do this. I thought you had to know people and it was kind of off market kind of stuff. And I discovered it really isn't. You just need to get educated on it. The idea is you're investing passively as a limited partner into a syndication kind of deal. And being a limited partner, once you write the check and turn your money over, you're paying a professional team to manage that property. The professional team is the general partner. They find the deal, they fund it, they manage it, they do all the work. You are a limited party. You don't have any say in anything once you sign the check. So you sit back, but I get all the benefits of owning real estate. I get the tax benefits. I get cash flow. I get equity from it growing and paying down the mortgage on it and so forth. So it gives me all the same benefits that I was getting from single family work, but I don't have to do the work and I don't get the headaches that come along with the work of 2 a.m. phone calls because the toilet's clogged or a leak's going or tenant leaves and trashes the place and you got to fix it up and everything like that. I don't have to deal with that. The general partners manage all that for us. It's all part of their pro forma. So my work becomes studying the general partners and finding one I know, like, and trust to be able to turn over money to them and say, thank you, go do this now and send me my distribution. So that's the quick and dirty of it, if you will.
So is it residential, commercial, a combination?
They can syndicate darn near anything. We see ATMs syndicated. We see car washes. We see laundromats, artwork, you name it. Asset classes are very broad, which creates a lot of shiny objects. And so I typically coach on figure out what your goals are, what you're really trying to do. And let's find 4 or 5 asset classes that fit that goal or those goals and then lean into those rather than chasing the broad spectrum of shiny objects that are in this business.
Okay. So, and I can really see the connection between Focal Point business coaching, working with small to mid-sized business owners to help them grow, improve, all of those things.
Yeah.
And even if somebody currently doesn't own a business and you're looking into this, you kind of are now in that entrepreneur space. I am investing money in something that I hope to get me some sort of return. And in this case, in a fairly passive way. So that certainly ties together. So let's, I don't know, coach me up here, Chad. So I've got I don't want to brag, but I'm doing really well. I got an extra $20 in my pocket that I'm looking to do something with. That's clearly going to get me $1 million back. But I'm sure there's some ranges, but regardless of the dollar amount, I say, hey, I might want to do this. What does that kind of process look like for you with care? Yeah.
Well, and I fell into the same gap. I made the mistake when I started. The first thing I do is a very focal point-ish kind of thing. I say, pause everything. Let's talk about your goals. Let's talk about what you're trying to do. Let's build your strategy in your buy box because it's an emotional thing. And I jumped into it. The first thing I bought was a 17-story building in Cleveland that was an office building being converted to residential. I didn't realize at the time that really what my goal was with this was to get cash flow to replace my W-2. Well, that building wasn't going to cash flow for years. So it was a mistake to get into. And this is the mistakes you make by getting emotional and looking for something that just looks awesome. I mean, it was promising big returns and blah, blah, blah. Right. So it was hard to not get excited about it, but that's the problem. So I pause people, say, no, slow down. Let's talk about this a little bit. And I use focal point materials to help really guide goal discussions then.
Yeah.
To let's get to where we take as much emotion out of this as we can and get very black and white with a buy box. So that way, when we get to a point of looking at deals, you can measure it against your buy box and give a much easier yes or no kind of thing. And even like for instance, my goal was cash flow. The last thing I should look at are development deals, ground up. They're not going to cash flow forever. These whole deconstruct a 17-story building and reconstruct it. Right. Not a good idea. It's not going to cash flow for a while. So the beauty of having those goals set, knowing what you want to do, it cuts out a lot of that noise so that you can really focus on the handful of asset classes that you probably ought to be focusing on. And that way you don't get inundated with things that are going to distract you. You can really cut through them quicker. So if the development deal, delete it and move on to the next one and see what else is coming. So,
or if your goals are more long term, then that might be the exact thing that you do want.
100% could go the other way. And then if that's the case, okay, let's stay away from asset classes like triple net lease deals that cash flow great, but little equity at the end of the day. You might get 25% over what you put into it. So so it's important to really spend time on that up front and go through and really think about treat it like a will, or you would a lot of your business. Define what you need it today. As your life changes and things change, well, then we need to pivot that strategy as well. And maybe you start with high equity because you're still in a W-2 and you like what you're doing. So let's just go build equity. But it's someday you want to pull away from the W-2 more. Okay, let's find cash flow assets now and mix it in there and get diversity.
And so you're investing essentially kind of as a fractional standpoint. Is that correct?
It's a good way to think about it. Yeah. There's usually, there might be 100 limited partners in the deal with you. And the reason the general partners coming to you is, say they're going to take down a 100-unit apartment building and it's going to cost them $12 million and they want to raise $3 million of capital to cover the down payment and cover capital expenditures that they want. They may have that on their own, or they may go to private equity and find it themselves. But a lot of these guys will go out to the retail investor, which is me, and ask for $50,000 from me. And then 100 other people that get in at various amounts. And that covers what they need to do so they can go do their project. And we just come along for the ride.
Right. I guess it just made me think of years ago when I started buying some stock and kind of created an account for my kid. And one of them was Amazon, because why not? Right. And he's like maybe first or second grade, Dad, I own Amazon, right? Like,
sure.
Yes.
You got a brick.
Yes. Go tell show and tell that you own Amazon.
Right.
And I'm like, I'm pretty sure we wouldn't be living here if that was the case. But again, it's almost kind of from that standpoint, it sounds like, right? Not to make, right. So you're looking at that, and how does that affect the goals? Is it more long-term, more short term? And without what is your kind of responsibility? If I give you X amount of money, what's the responsibility on my half or my part at that point?
Yeah. So your responsibility really starts before you ever write the check. Your goal is we always say you're betting the jockey, not the horse. So you're really trying to get to an operator, a general partner that you feel is going to be a good operator of this project for you. Then you understand, once you kind of identify, you start with an asset class. What asset class fits my goals? Then what operators are in that asset class? Once you identify one you like on them, then it's, okay, now let me see your deal and vet your deal. So we call it, you're a passive investor, but we call it an active passive investor. That you got to do all this due diligence work up front. That's what you're really responsible for. Once you write the check and you turn it over, then you're along for the ride. Then your responsibilities at that point are watch for the quarterly reporting that they do. Are they staying on track with what they said they do? There are limited things that you can do once you get into the deal, but they're powerful things that if all of a sudden a GP is not performing to what they said they would and it's borderline fraudulent, you can work together with all the other LPs and you can actually remove the general partner and vote somebody else in. I was actually in a deal that did that this past last year, I guess it was. Took a general partner out of 3 different deals that he was running because they didn't believe he was running it accurately or without fraud involved. And they picked somebody else that they wanted the deal to go to, and it's transitioned over them. And it was probably a really good thing in that case. But so nice. You can do some activity.
I love a good little coup d'etat. So that's always nice. Yes, so and I'm absolutely. Sure like the mind, I don't care what it is when you're spending your money on something, there's always the fear, right? Like, I think that's what kind of like franchise, we talk about it all the time, all the things that are going to cause fear. And a lot of times it's just the fear of the unknown, but you do want to protect yourself. I'm quite sure that rarely happens, but what are the recourses if it does? And then once you put that money in, does it depend? What are kind of the timelines of or the rules on when I can pull that back, or when and how do I start making money on that investment?
Yep. And again, this will depend on the asset class too. There are syndications that pull debt by debt off of companies that have a bunch of debt on their books and they want to get rid of it. A lot of those you can get in and out of in 90 days or maybe a year. When you buy into a syndication that's buying an apartment for 5 years while they fix it up a little bit, leave some meat on the bone, and then try to sell it to somebody else at some point in time. So some of the syndications, once you put money in, you're at their mercy of when they have a capital event to get money out. A lot of those individuals 5 years ago, they were refinancing a lot of your money back to you after a couple years. So they buy it. It was kind of under distress. They'd fix some of the properties up, and then they could go get a refinance for a greater value, give us some money back and keep us in the deal, and it keeps flowing until they sell it. So it kind of depends on the asset class of how long you're in and what you're going to see. A lot of those deals will start distributions within a quarter, maybe a year, if they got to fix some units up and then get them up to market price and so forth. So again, it gets kind of complicated. This is exactly why I put CARE together to go help coach people to say, okay, it's not rocket science, but it can get complicated. Let me help cut through some of the fog for you.
I was going to say, the thing I was actually just writing down, I was going to ask, I was like, how does somebody figure all of this out? And in some ways, it's like you're doing on the real estate side what FranCoach does on the franchising side. It's like, how in the heck do you figure out, right, with all of this? And so on your end, how do you know, right, which all the different classes and the people behind, how do you know who you can trust, and how do you find all these people?
So, I mean, I've been doing this since 2018 now, so I've got some experience under my belt. Not a huge time, but a decent chunk of time. But the biggest thing I advise people on when they're new and they're starting out is get involved in a community. There are communities out there. Left Field was one. We sold our business to Bigger Pockets. It's now called Passive Pockets. There are other communities that are out there. We always encourage people join multiple communities because you're going to get feedback from people that have experience with these operators. They're going to help educate you to make a better decision around you just deciding on yourselves. Well, I talked to them. They seem nice. They sent me a shiny, glossy portfolio to look at. That's fantastic. We always say, beware of the good marketer. Don't settle for the good marketer that maybe doesn't know what they're doing. But we encourage people, go get into a community and ask the question. Like if you're vetting somebody and say, I met Chad Ackerman, general partner, and I just met him. I don't know anything about him. I go into the community in the forum and I say, hey, has anybody ever worked with Chad Ackerman, general partner? And if it's crickets, then I go back to the GP and I say, sorry, nobody in my community's heard of you, so I'm not going to invest with you right now. Doesn't mean never, but I want to watch you for a year and get your reports and see what you do, and maybe a year from now I'll invest with you. But generally, if you find somebody has worked with them, that word of mouth from the community is pretty golden then to help you feel a little more comfortable. Doesn't mean sometimes we're wrong. Groupthink can get you in trouble too.
Right.
But for the most part, I trust the community, and at least it bakes into my decision making by being involved with the community. So I highly encourage that. It's too risky to spend that much money on and not have a Tim Parmeter to help you make a decision from coaching you through what franchise you want, or a community of people that can help kind of educate you some more too.
So, and I'm going to kind of make a guess here. I don't know this, but the correlation back to franchising too is people sometimes like, man, whatever reason, I don't like my job, or I wish I could work for myself. How about a franchise? And they start thinking of all the high dollar stuff, right? There's McDonald's and Taco Bell and or restaurant, all these things that are multi-million dollars. I don't have millions of dollars. There's no way I can own a franchise. When yes, that is the reality for those brands, but the flip side is there's all of these things on the other end of the spectrum, sometimes down to even like, $100,000 ish for a total investment for a franchise. Yeah. That doesn't take that much cash out of pocket. And people are like, oh, okay. I didn't know that was possible. So somebody, and I'm hearing it, I'm going, oh man, there's these big giant apartment buildings and a $15 million investment. I don't have $15 million, right? Like, well, if you had the $15 million, I guess you'd just be buying the building by yourself, right? So are there, I'm sure it's really wide, but are there ranges or kind of like minimums that people need to think about to be able to invest in something like this? Yeah, no, good question. I get that one a lot too. And it's a big myth in the industry people generally think, oh, I need $250,000, $500,000 to do this. Well, generally, the retail investor, like I am, the deals I'm finding, a lot of them have a minimum of $50,000. And there's kind of an unwritten rule in the business that if it's the first time you invest with an operator, you can ask them for less, and most likely they let you in for 50% of that. So you could get into a lot of these for as little as $25,000. Beyond that, there's a company called TribeVest that they actually help. You could do this on your own. You don't need TribeVest, but there's a lot of people that will pool money together. If you got friends or family that are interested, and none of them want to write a $25,000 check, which I get, it's a big commitment. What if you found 5 people that each of you put $5,000 in, form an LLC, and go invest in it together? It's a good way to get started and spread that risk out a little bit further. So I help coach people about how to build that model as well, to dip your toe in the water a little bit more and spread out that risk. And I don't try to, like, we always preach diversity in the asset classes you get into. So you're not all in multifamily and all of a sudden the housing market takes a dump and your whole portfolio tanks. We preach, obviously, diversify an operator. So you don't give all your money to Tim Parmeter and then Tim runs off to Tahiti or something and is gone. And diversify in geography. So don't buy it all in Florida and a hurricane takes out your whole portfolio. If you do those 3 things, that's a really good start. And the best way to do that is invest in the minimums in multiple deals so that you're spreading your money around. You're meeting new operators if you're not going to invest in the same operator twice for a while, which is encouraged. And that gets you into that know, like, and trust mode with multiple people, but you've spread your risk. It's like getting into a
like a mutual fund or something that you've spread your risk
Right.
around a little bit more. So I always try to coach people along that facet to spread your money out. Don't get excited and this seems like a winner. I'm going to dump everything in here. It's like, win with a little bit, win with your minimum and be happy about that and survive to the next one.
Gotcha. Okay. So that minimum is kind of per investment, but you could do that several times. So you've got that diversity. And you mentioned earlier, one of the things about real estate, and this happens in franchising a lot, it's like people kind of fall in love with something and for all of the wrong reasons, usually in real estate. And in fact, we've got a guest coming on in a couple of weeks that's talking about that they do real estate for franchises. And it's very, very common. Like, oh my gosh, I love this space and all the things, but what they love about it has nothing to do with why it's a good or bad location.
Yeah,
right. And so I'm sure you've got some of the same thing where people get enamored with something, but it's not like you were talking about, like going back to what your goals are for this. It may be great, just not great for you. That factors in a lot for you guys with this, right? Absolutely.
We'll get deals all the time that kind of a standard IRR for a multifamily is that you get 17 to 20% return on the deal. We'll get deals all the time that come in with 30% IRRs. And it's like that's an immediate red flag for me to say, no, I've seen too many deals that unless this is like your cousin's building or something that it got willed to you or something, there's got to be a really good reason that you can turn over something, like, especially in this economy with interest rates like they are and how slow everything is and what tariffs are doing to products to fix things up. I'm like, I just don't trust any of it. So you kind of learn, again, this is why your buy box is important to have, of don't get sucked into it. One of the biggest things I coach on too is get over FOMO. You need to not have fear of missing out because there's going to be another deal. So don't get wrapped up in one and feel like you got to jump on it because there's going to be something else. If it doesn't fit in your buy box, skip it. There's going to be another one that comes around that will.
Yeah, absolutely. So then again, probably some similarities here. So the question we'll get asked a lot is, wait, you're going to help me figure out what I actually want versus what I think I want? Because those two things are rarely the same in reality. And then figure all of this out, like what's the cost? And as you know, working with FranCoach, there is no fee. We're like recruiters. We get compensated on the back end. You're an awesome dude, but like you ain't doing this for free, right? So how does that work for folks that want to work with you on something like this?
Yeah, no, good question. So I set up a package, kind of an onboarding package to this is the focal point coming in again and helping me think through this. It's a 7-session course to send people through to get you started. It's goal setting, it's strategy discussion, it's how to vet a tenant or a operator, vet an operator, how to vet a deal. It's setting up your business, as you kind of alluded to. Investing is a business. So do you set up an LLC or not? Get a separate bank account and so forth. So it's a process just to kind of get you going and get you educated. And then I also offer one-on-one coaching on a monthly basis after that is structured very similar to Focal Point. No contracts. We'll do it as long as you have an interest in getting help coached on this stuff to get you going, get you educated, get you into the business and feeling comfortable. My whole goal, kind of like yours, is people study this for a long period of time and don't take action. It's trying to help them get the confidence to go ahead and take action because they believe in real estate. They believe it's a thing they want to be involved in, but it's a lot to digest on your own right out of the gate. Yeah. So it's very similar to what you're doing, basically. Right. I just copycatted you.
Yeah, no, like I don't. I could see why not.
It's your modesty. Yeah.
But again, it is the same thing. It's the education, and again, what the a little time and a little money to go through to learn, and maybe it's not for you now, but at least you understand it, and maybe sometimes it's the timing aspect of that. But and I think you said something. I think before we hopped on, and you said this to me numerous times throughout our relationship is, hey, you're an HR, like you came from HR. You're not a salesperson, right? And
I'm not finance.
I always say the same thing. I suck at sales. And so it's that, but what it does is it helps you focus on getting to know people, getting to educate them, making sure that they understand everything and they're not getting fooled by the person it's the shiny marketing or it's the sale. Like, it sounds too good to be true. It is too good to be true. Just run. In fact, literally the intro to our dang podcast right now is literally just because there's some of that in the franchise industry where people are sell, and telling you all the great things without getting to know you, without you really understanding all of the things, and you don't want that. And real estate can be that same thing. So I love the fact you were taking that approach, which is awesome.
Appreciate that. Yeah, it's what I've loved about the community of passive real estate investors. There are no trade secrets they're keeping from one another. It's a very open culture, and generally the people you find in it, when you get them talking about real estate, they're on the edge of their seat. They're passionate. It's your test. It's the get out of bed test. They're getting out of bed to do real estate work. Those are the people I like to find that are trying to figure out how to get into the space, that don't fully understand it. I thought I was going to do single family stuff forever. I found out about this passive side of things, and I'm like, that was the switch that flipped of like, that's the thing. I could keep doing whatever it is I'm doing, but I can get into real estate because I studied wealthy people. All of them have real estate in their portfolio somehow, way or another. So I'm like, there's got to be something to that. Let me go figure out how to get in it, but I couldn't figure out how to scale. This let me scale to the point where I liquidated my 401k. I moved it over and put it in. I don't encourage that. That's not the plan. It's a plan. But it was.
But you didn't start
what
like
I fell
that.
Into.
Right.
Correct.
You just like,
Correct.
hey, let me withdraw all my 401k money and send it to this person the first time. And no different than, I think we talk about wealthy people. They are rarely W-2 employees only, right? They're entrepreneurs, whether they've started something, franchise owners, and or there's real estate involved, right? Like almost every single time. Mm-hmm. And the real estate side and the franchise side can seem scary to people because we think the high dollar stuff, right? It's confusing. How do we do it? You need somebody that can just help educate you on it. And I love what you were doing with that. And so super cool. And so so you've had kind of a fun journey, right? Like you're the employee, then we get into the real estate, and then you've got that business that you're able to sell, which is amazing, a franchise owner, and then now starting a new business. So you've kind of gone that full gamut. I don't know, maybe 8-10 years ago, like when you were just straight employee, could you envision where you are now?
Not at all. But I love, it was all the myths that everybody kind of believes. That's what kept me out. It was all that fear, or I don't have enough wealth. I don't understand it enough. I can't do it. It's very complicated. All those myths kept me out of it. That we've talked about this. This is exactly why I put my kids in an LLC with me, and I invest with them to open their eyes to this and get educated on it a lot sooner than I did. Yeah. To say, hey, there's flexibility out there that people don't teach. This isn't taught anywhere. So you're lucky you have the dad you have, basically, is what I tell them.
So make sure I'm in the good retirement home when I'm old.
Exactly.
Yeah.
But I was a victim of all the same things that a lot of the people that I coach were as well. I came from that space. I was in HR in a big corporate Fortune 15 company. Felt comfortable, but it wasn't everything I thought. I thought there was something else. When somebody put the bug in my ear to go look for multiple income streams, that's what sent me down my path, and I landed here. And I assume people can feel the passion coming out of me whenever I talk about this, because this is why this kind of what we did with Left Field was just get the word out. This is exactly why I built Care. Was I just want to keep getting the word out. I just want to educate more people and teach them about it. So if they're curious about it, get a hold of me. Let's talk about it and see if I can get you excited about it too.
Yeah. And so, and I've got one more question for you, but before I let you go, but when somebody is like, maybe I should talk to this Chad dude, how do we do that?
Easiest thing, you can go to my website at chadackermanrealestate.com, all in word, or find me on LinkedIn. I'm all over LinkedIn as well.
or in the show notes right here, it'll be there as well. So we're fancy like that, Chad. We're gonna hook you up. So you've had this amazing journey, and really, and I hope somewhere in there, and it's hard to do this, is like give yourself the credit for the I'll say the risk, but really it's not all that risky, right? But to take that jump into the entrepreneurship, real estate, franchise, now having your own business. What's maybe some advice you would give somebody that's sitting there that hasn't taken that step just yet in any of those categories?
Yeah, the biggest thing I try to tell people, and I did it from very early on with Focal Point, and even talking to you, get somebody to take action. Taking a step, moving forward. The very first thing I did when I started investing in real estate, I just set up an LLC, and that felt like I was moving forward, which just motivated me to go do something else. It's so simple. The next thing I did was set up a business banking account. So very simple things, but at least it was action. It did get me doing, okay, I've done this. And I love the idea of tell your friends, tell your family, talk about it, because it kind of holds you accountable to, they're going to ask you about it. Oh, how's that thing going? You said you were trying to do. So I tried to get very vocal about what I had in mind. Once I kind of knew the direction I was trying to go, I think that was a big part of keeping me accountable and keeping me taking steps that were actionable, rather than just study, So you got to study, get educated, learn. Yeah. But at the end of the day, you got to do something with it. And
I'm drawing a blank on the author's name right now, but the book Atomic Habits is like talk about the 1%. Like, how do you just get 1% better? And when I'm just like, oh, I got an LLC, and even that seems like a big step. And you're like, I don't know, like the legal Zoom, ink file, whatever, a couple $100, and poof, you have it. And then you
set up as many of them as you want.
You've got that, and then you go down and you get a business. Like it's a pretty small step, but it is a step moving forward. Yeah. But you mentioned something, like, hey, start talking about it with your friends and your family. And as you start to get excited, and then they're going to hold you accountable and all those things, but there's going to be somebody in there that's like, Chad, what the hell are you thinking? Like, how do you handle that? Because it's inevitable. There's always going to be somebody that's going to do that.
Definitely. No, and I definitely had that along the way. The other parable that I've received through the years that I like is, you are, who you surround yourself with. And so I tried to seek out people that were doing what I was doing, one, to learn from them, but two, to help build my confidence that when I met the naysayer, I could brush it off, or I had not come back, but I had a way to debate it with them and so forth. And at the end of the day, check it out, file it in the back of my head, but go back to my team that was, doing the same thing I was doing to help build me back up, kind of thing. That was a huge part of this as well, was finding people that understood what I wanted to get into and I could surround myself. Not that I cut loose friends that I'd had for years that thought I was an idiot for doing this stuff, but I did just, you ended up limiting your conversation about the topic until you had better proof to talk to them about. Say, hey, look at this that I did. Hey, not to rub it in their face, but to say, no, this is tangible. This has some credit, So
I think a lot of times there's just maybe a little bit of jealousy in that standpoint. They don't have the courage to take the same thing. But and I tell people this all the time. You're gonna start a franchise, and you're gonna have different, like, your friend group's gonna kind of change a little bit, right? Because there's gonna be somebody out there. Well, one of my best friends still to this day, I don't think he's got the foggiest idea what I do. My wife and I talk about this with our families. Like, they kind of glaze over trying to talk about it. Right. So they just don't. And so that's okay. But then I got, here are my franchise friends that we can all kind of talk, and you're going to have the same thing from a real estate standpoint. And I just, again, like, it's the, surround yourself with the people you want to be, not the ones that you don't. Is pretty dang simple. So
agreed. If they're a couple steps ahead of you, all the better, because you can learn from their mistakes and so forth, and all of that I think is very valuable to help get.
Well, and again, that's when you talk about the community aspect from a real estate standpoint, again, very similar to a franchise network or system. I'm sure If you had a question at any point in time in your focal point journey and you shoot a message out to other owners, I'm sure it's just you're getting flooded with responses and people there to help because you have surrounded yourself with like-minded people.
Exactly. It's very powerful. The community, I'm a big fan of the community experience. So there's a lot of value in that for people, depending on what you're trying to do. So
awesome.
All of it's cool. Good stuff.
Indeed. As was this, and always enjoy chatting with you, my friend. And I appreciate you coming on to talk to us a little bit about care. Chad Ackerman realestate.com is where you find our pal Chad, or on LinkedIn, or there in the show notes. Chad, thank you so much for coming on again today. I appreciate it.
Always a pleasure, man. I'd love to get on and chat with you again. So thanks for having me on.
We'll do that. We'll just make it an annual event. It'll be good. So,
right.
Awesome. Cool. Thanks, Chad. Thanks again to Chad Ackerman for joining us. Franchise owner, business owner, real estate investor. He's got a whole bunch of things going on. We didn't even get into the fact that he's an Ohio State Buckeye fan. I don't hold that against him because he's a good dude, and happy to have him join us. And we hope, as always, these Franchising 101 podcast episodes help educate you on all of the things that come into play as a franchise owner and give you insights into the amazing possibilities that can be achieved. When you are ready, our team here at FranCoach is here to help you. Again, never any fee for our service. Also, don't forget, subscribe here or wherever you're listening to our podcast. Our YouTube channel has all of this plus a bunch of other things, and our Franchising 360 show, which we are in season 2 of on Biz TV every Friday, 8 Eastern, 5 Pacific, 1:30 Eastern on Sunday. It's even on Wednesday mornings again. This thing is blowing up. We've got 3 different airings, and you can always find them the following week on YouTube as well. Again, when you're ready to reach out and figure out if this is for you and owning a franchise, and if so, which one, FranCoach.net is where you're going to find our team. We're here to help you create your better tomorrow. Thanks for tuning in, everyone. We'll see you next week.